think Bitcoin's about to move next and catch up quickly. And historically, Bitcoin, as we know, has outperformed gold massively. And so, in my view, Bitcoin will on this next run go to, 150, 200, 250, sometime within the next year. And by the way, I think during that time frame, gold will probably go 4,500 or 5,000 on a percentage basis. I mean, if Bitcoin goes to 250, that's up 100% in the next year. And I don't think gold is going to double in the next year. I don't think it's going from 4 to 8. I ultimately think both of these things will be much, much higher in fiat terms. I mean, it's a funny problem, Sean. I mean, we talk about this and I say, because I believe Bitcoin's going to $1 million and gold's probably going north of 10,000. And that's the good news for those of us who've invested in them. But the thing I caution is that, yeah, okay, fine, but that will be with a lot of inflation.
Lawrence Lepard isn't worried about Bitcoin's recent pauses. As he puts it, being up 80 to 90% year over year is hardly disappointing. What he's watching now is the handoff between gold and Bitcoin. In every major period of financial stress, gold tends to move first. It's the veteran's safe haven. Bitcoin usually follows once the panic starts turning into speculation again. And according to Lepard, that moment is getting close. He's actually begun rotating part of his position, selling some gold to buy more Bitcoin, because the gold to Bitcoin ratio is flashing a clear signal. In his view, Bitcoin is due for a major catch-up move. If history rhymes, he sees Bitcoin rallying toward $150,000 to $250,000 within a year, while gold climbs to around $4,500 to $5,000. Both will rise sharply in dollar terms, but Bitcoin, he says, has the stronger percentage upside. Gold remains unmatched as a hedge against inflation, but Bitcoin goes a step further. It's still early in its global adoption phase, only about 4 to 5% of people own it, and yet it's already the best performing asset of the past 16 years. With roughly $900 trillion in global assets and Bitcoin's total value still around $2 trillion, Lepard sees enormous room for expansion. His bottom line, gold leads the way, but Bitcoin takes the baton and sprints. Both are hard assets thriving in an age of debt and currency debasement. The difference, he says, is that Bitcoin's finite supply and accelerating adoption give it the kind of asymmetric upside gold simply can't match anymore. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
And I know some of the Bitcoiners are kind of frustrated. They're like, hang on a second, gold's really doing great. And silver is too. Where's ours? Well, first thing I would say is, remember, Bitcoin's still up, 80, 90% year over year, which is pretty damn good. And two, gold typically moves first and Bitcoin follows. I fully expect that, right now the gold Bitcoin ratio is kind of up against its lower trend line. And what that means to me is at the margin right now, I'm selling gold and buying Bitcoin. I think Bitcoin's about to move next and catch up quickly. And historically, Bitcoin, as we know, has outperformed gold massively. And so, in my view, Bitcoin will on this next run go to, 150, 200, 250, sometime within the next year. And by the way, I think during that time frame, gold will probably go 4,500 or 5,000 on a percentage basis. I mean, if Bitcoin goes to 250, that's up 100% in the next year. And I don't think gold is going to double in the next year. I don't think it's going from 4 to 8. I ultimately think both of these things will be much, much higher in fiat terms. I mean, it's a funny problem, Sean. I mean, we talk about this and I say, because I believe Bitcoin's going to $1 million and gold's probably going north of 10,000. And that's the good news for those of us who've invested in them. But the thing I caution is that, yeah, okay, fine, but that will be with a lot of inflation. So, what would, as I call it gasoline, as you call it petrol, I mean, what will that cost? What will beef cost? I mean, if you've got $1 million Bitcoin, fine, but remember the cost of everything you have to purchase is going to be higher too, because there's going to be a lot of inflation to get there. So, but all we can really do, and as you said, you feel very comfortable. I think one of the great things about being a Bitcoiner, about understanding this, and I watched my father retire with a fixed amount of money and watch it dwindle away as inflation ate at it and he got older, is that you actually kind of feel like you're not losing the rat race. I mean, if you save in this money, that over time you will get richer and it will protect you. And those are legitimate savings that you can rely on in your later years. And that, just knowing that, is an enormous sense of comfort to me. Like most human beings, one of your great fears, particularly as you age and you have less ability to earn money, is that you're going to run out of money. It's a bummer.
100%.
You don't want to run out of money. And if you've got a form of money that's keeping pace with inflation or even beating inflation, as Bitcoin really is. I mean, I think gold is designed and has historically kept pace with inflation. If you put your money in gold, you're not going to lose money compared to inflation. Like Bitcoin is going to outstrip inflation because you've still got the adoption curve going on. It's gold that everyone doesn't understand yet. And I read this morning that still only about 4.5% of the world owns some Bitcoin or gets it. So we got a long way to go. I mean, this is the Jesse Myers chart where there's 900 trillion of assets out there, and Bitcoin is worth 2 trillion or 2.1 trillion, something like that. So that's 0.2%. And yet it's, the best performing financial asset of the last 16 years. And it's the hardest financial asset on a stock to flow basis. It's harder than gold. And every 4 years, it gets harder still. So the combination of that and the fact that this adoption curve is going to keep going, and in 10 years, half the country is going to own Bitcoin. There's no place for this price to go except for up. And that's another point that I would try to make is that Bitcoin was the invention of digital scarcity. I think the important thing to understand about that is that, and it's a commodity. One Bitcoin's the same as another. So the important thing to understand on this is that every other commodity in the world, if the price goes up, we make more of it. If oil goes skyrocketing, we'll drill for more oil. Wheat, we'll plant more wheat. Anything out there. Gold, we'll mine more gold. It takes time, but we'll mine more gold. Algorithmically, the supply of Bitcoin is fixed. And so we've never really had a financial asset like that before. So a higher price does not change the supply.
Lawrence Lepard says a lot of people in the Bitcoin community are frustrated with how slowly policymakers are moving. He points to Senator Cynthia Lummis' proposal for the U.S. government to start buying Bitcoin in a revenue-neutral way, an idea that could have been a turning point, but it's still sitting idle. For now, he says, even holding on to the roughly 200,000 Bitcoin the government already owns would be a smart start. He echoes Michael Saylor's point that whoever learns to use fiat currency to accumulate Bitcoin first wins. Every major government knows its currency must be devalued to manage debt, but no one wants to trigger a panic or hyperinflation. So they're walking a fine line, managing a slow transition rather than risking a sudden collapse of confidence. Lepard also notes a quiet but meaningful shift in U.S. politics. People close to Donald Trump are starting to embrace Bitcoin and sound money ideas. One example is Stephen Moran, a young pro-Bitcoin economist recently appointed to the Federal Reserve Board after serving as Trump's top economic advisor. At the most recent Fed meeting, Moran dissented against Jerome Powell's cautious 25-point rate cut, instead pushing for a 50-point move, exactly the stance Trump favors. Let's get back to the interview.
Yeah, and I think we've all been frustrated by that. I mean, Senator Loomis's bill, laid out a plan to buy a bunch, and Bessent talked about doing it in a revenue neutral way. I mean, sadly, they've probably got other priorities in front of it. I mean, for starters, if they don't sell any of the 200,000 coins they have, that's a start. I would say that they will hopefully get to it. They'll come to the point where they start to buy it. I mean, and as Saylor has said, the first country that figures out how to print, fiat to buy Bitcoin kind of wins. I think they're also aware, they know the dollar is failing. They need the dollar to be devalued, but they don't want to do it too quickly. They need a transition period. They need time. Going straight to full hyper Bitcoinization / hyperinflation, that's dangerous and a mess in their mind. And they're probably right about that, but they're trending in that direction. I mean, I think there's some interesting data points too. So I don't know how many Aussies probably know this name, but this guy named Stephen Moran, who is the chairman of the Council of Economic Advisors in the White House. He works for Trump. And he's young. He's a Bitcoiner. I mean, he tweeted. In fact, this is my upcoming quarterly report, which will be free and out probably by the time you publish this. So it's at my website for free. He tweeted, on talking about some problem, and he tweeted, "Bitcoin fixes this." Okay. Now, so this is a guy who's in, we know Lutnick is positive. We know Kennedy is positive. We even know Bessent's positive. Bessent is a gold bug, but he's admitted that Bitcoin is digital gold. So we've got all these people around Trump who are very positive on sound money, and arguably are talking about a reset. How much Trump himself understands is a little unclear, but he's being advised by good people. And this Moran guy is very interesting because, Trump has attacked the Federal Reserve. As we haven't discussed this, but as most people in Australia may have not seen it, but he's really attacked the Federal Reserve. I mean, he's called Jerome Powell a moron. He said he's too late. I mean, it's
Well, he
unprecedented.
wants to kick him out, doesn't he, next year?
Yeah, well, he's going to get kicked out. In May of next year, he's gone. His term ends, and he will appoint somebody else. He went after Lisa Cook, who's a woman who's on the Federal Reserve Board and claims she committed mortgage fraud. And, pretty arguably she did, but that's in front of the Supreme Court, whether that constitutes cause for firing her. But he got lucky. This other Fed governor quit, and so there was an open seat, and he put Stephen Moran, his council economic advisor, he put him on the Fed board. And, this is a guy, so there's a Bitcoiner on the board of the Federal Reserve, right? And
wow, I did not know this.
Yeah, right. And so this guy is a Bitcoiner, full-fledged Bitcoiner. In the most recent Fed meeting, Powell said, let's cut rates 25 bips. And Moran dissented and said, no, we should do it 50. And both Trump and Moran have said interest rates need to come down between 200 and 300 basis points. And of course, they need to do this, Sean, because if they take those rates down that low, that will lower the government's cost of borrowing, which will help with the deficit. Okay, that's the good news. The bad news is if they take rates down that low, borrowing will increase, M2 will increase very rapidly, and it'll be highly inflationary. I mean, they haven't really solved the last bout of inflation, and yet they'd be cutting in an inflationary environment. And so like the 70s, we would have another big upwave in inflation. But, I think that's what they want. I mean, they know that they have to grow faster than the debt grows. They have to grow GDP faster than the debt grows. And the only way to do that is to have inflationary growth, So that's kind of where they're going. And you can see it. I mean, they're talking about it. Besant has said, when Doge failed, he kind of said, well, yeah, we've done the best we could there, but really the solution to this problem is we're going to grow our way out of it. Okay, fine. How do you get growth? You lower interest rates. And so, Powell is there until May of next year, 26. But, with the markets are forward looking. So it's October. May is not that far away, right? 7 months or something, 8 months. And, the market says, okay, we get it. When he's gone, you're going to put Moran in the Fed chair or some other guy in the Fed chair. You're going to direct him to cut rates a lot. And, that's going to massively fuel inflation. And that's why, in my opinion, that's why gold and silver have the bid that they have. The market can read the tea leaves of what's coming. And they're saying, okay, well, fine. You want to do that? That's fine. We understand that, these metals are a protection and we're going to buy them.
Momentum is shifting in ways that few are fully appreciating. The quiet interplay between gold and Bitcoin isn't a competition. It's a reflection of how capital is evolving in a world drowning in debt and fading trust. Gold still represents stability, the centuries-old anchor of value when paper currencies fail. But Bitcoin has become the new instrument of defiance, a digital form of self-sovereignty designed for an era where central banks can't print discipline. Lepard's confidence captures that transition perfectly. Gold sets the stage, Bitcoin takes the spotlight. The wealth migration he describes isn't just about chasing higher returns. It's about investors adapting to a changing definition of safety itself. As governments edge closer to monetary resets and policy paralysis deepens, the question isn't which asset performs better, but which one people will turn to when confidence in the system itself runs out. When that turning point arrives and trust in traditional money truly falters, will the world lean back on gold's familiar weight, or reach for Bitcoin's code-bound certainty? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.